everyone.
Hello.
Should we start? Michelle,
Mm.
I need your permission.
Yeah, you're good to go.
We have a much better looking guest this time.
Hey, want to say?
That's true.
Okay, so I'm going to tell you to do something that I didn't prep you for.
Oh, good.
That's my style. Okay, so tell us how you got into real estate. Like, why'd you do this? Tell us who you are?
Sure. So I'm Ainsley Murdock. I got into real estate. So my mom has worked for Dixon Realty for 20 plus years. So it was just kind of in my calling, but I didn't realize I was going to love it as much as I do. I started in admin and relocation and marketing. And I was like, I am ready to
Do this right after school?
Yes.
Okay.
Graduated remotely, college, and then just came to this. It just kind of fell in my lap and
What did you major in college?
communications and marketing.
Oh, perfect.
Yeah.
Okay. So then you started on the admin side of real estate at Dixon.
Yep.
Okay.
Yeah. And I was like, I'll do this for a year, but I am ready to like get out there, get into the field. And with my mom doing it, I've grown up around plenty successful realtors and just kind of see the way everyone works and know like how I want to run my business. And so it's been super helpful and everyone has just been such an asset to my business.
Was there pressure to like do a team with your mom?
Not
Have a
really.
family business?
I mean, it was definitely interesting to get to work together. My mom and I are super close. So, but we do work together in some sense. She's our transaction coordinator. And so, yeah, that's fun.
That's cool.
It's your mom that I'm emailing?
Danielle Murdock. Yeah.
Oh, I didn't know that.
What were you thinking? That's the same last name.
I just thought it was like a cousin who's young. She's blonde in my mind. Is that true?
No.
Oh,
Oh my gosh. That's for later.
that's so weird. That's great though. Okay.
Yeah, I love
I
it.
did not put that together either.
All right. Ainsley's the listing agent on a project that we're involved with, 18 on Lakeside. When are these hitting the MLS?
Hot off the press, we have the first release coming next week. Yes, it's very exciting.
Oh my gosh, so long in the making.
Yeah.
Some of you guys might be familiar if you're local with 14 on Cashel, which was this beautiful project that literally sold itself in 5 minutes. And the same builder is now developing 18 on Lakeside, which if you're interested in checking out, you can reach out to Ainsley to set up a private showing. It's a full-on construction site, but that's super cool to go see it right now.
Yeah.
And if there's also the website, 18onlakeside.com. I think the cool thing about this project for me is Reno has a problem with density. They get their panties in a wad about it all the time. But Reno also has a problem with affordability. And so people will say, I'm saying this because you can't. People will say that you can't list luxury townhomes and think that you're helping with affordability in Reno. And I understand that point of view fully. But I also think there's a mindset shift that we are helping with, which is that there's going to have to be density. We're going to simply need more properties and we're going to need properties of different types. Like, not everyone living in Reno now wants a single family residence with a lot of space. You must see this with buyers, right?
Yeah.
There's different needs. We have clients moving here from out of state. You work with a lot of different buyers. People have different needs when it comes to real estate, don't you think?
Yeah, totally. And like these are going to be perfect lock and go situation for people who, yes, they live here, they work here, but also people who maybe work in California and are here like 3 to 4 days a week. It will be such a perfect setup for them. They're going to be 2,000 plus square feet, all of them, and they're going to be 2 to 3 bedrooms and just very like functional space.
That's not teeny, like you're not cramped.
Yeah, exactly. And we're super excited for the community because it's going to have their own pickleball court. So very perfect for people's newfound love for the sport.
What's the date of the pickleball promenade so I could tell people to save it?
July 18th.
We're planning a really fun event. Oh, you should put your phone on silent before you host a podcast.
I think I have the same exact spam call this winter.
Well, I don't have to have anxiety about what borrower's calling me right now. We're hosting a pickleball promenade, which will be open to the public. Save the dates for that. You'll be able to come enter the pickleball tournament with a donation to a charity. What's our charity?
Answer Community Clubhouse. Super awesome.
And so you'll enter in the tournament, but then JP will be driving golf carts up to the model, which is going to be ready in time, isn't it?
Yeah. Oh, yeah.
So that you can tour the property. So save the date for that. Anything else important we need to know about 18 on Lakeside?
No, come and see us. I mean, give us a call so we can show you. They're super exciting and it's cool to see it in this space.
You'll die when you see the views.
Yeah, and the location is fabulous.
You could walk to Pilates. It's like literally across the parking lot.
Yeah.
Okay. So, economic update this time. It's really interesting because we're in the middle of a big news week for rates because it's the jobs week. And the jobs report will come out on Friday, but we got a preview of it today with the ADP numbers. ADP only really measures the private sector and only is measuring companies that do payroll with ADP, but that's a lot of companies in the US. And the teaser is it could be good news for interest rates on Friday based on what ADP showed today. The jobs number will come out. It's not going to influence whether the Fed decides to cut or not come July. But what I'm really going to be looking at is the unemployment rate because that's the Fed has two mandates. They need to regulate the job market and they need to regulate interest rates to control inflation. If the labor market shows an unemployment rate at 4%, they say like 4.5 pressures the Fed to take action to not be so restrictive in their policy. So I will be pretty stoked, and I hope everybody could pray for me for the next 2 days that we get a 4% unemployment rate. I know that's mean to pray for bad news, but the truth is, boots on the ground, the average American, the consumer, we don't feel like the economy is as good as these reports have been showing. And so we need the reports to be more accurate. But what I wanted to talk about today is a lot of people aren't aware that the Fed has another means of moving the market. The Fed funds rate is not exactly mortgage interest rates. It influences mortgage interest rates, but the Fed funds rate is your short-term lending rate. It's what's going to influence your credit card rates, HELOC rates. They're not cutting anytime soon, I don't think. In reality, I think we don't see a cut until much later in the year. They could still create major waves for mortgage rates and in the real estate industry this month if they follow through on what they said. I have to first explain quantitative easing versus quantitative tightening. We've been in a long phase of quantitative easing. Quantitative easing is the Fed doing things to stimulate the economy. So, stimulus checks is a good example of that. We've been in a phase of tightening, restricting, where they have not been trying to stimulate the economy. They've been trying to slow the flow of money to bring down inflation. What actually drives mortgage interest rates is mortgage bonds, the demand for mortgage-backed securities. When there's a lot of demand for mortgage bonds, interest rates improve. It improves the pricing for us. The Fed has been in a phase of quantitative tightening and they have a balance sheet. They hold a lot of mortgage bonds and they've been letting them run off, which is a flood of supply into the market that no one ever really talks about except for us on the inside when we wake up every morning and see where mortgage bonds are. They've been letting that run off and there's been more supply of bonds, and depending on how many other people are out there trying to buy them, influences my interest rate for the day. They said they're going to slow the runoff of their balance sheet in June. And if they do that, it could be really, really good news for interest rates. And we could see some pretty notable improvement without any cut on the actual Fed funds rate. So that's something everyone should be watching. I'm not sure how much they'll talk about in the news, but we'll keep showing up to update you on that. Let's talk about making an offer stronger.
Yeah, let's talk about it. Okay, so when you're submitting an offer, there are a lot of things that go into play with structuring the offer, and you as the buyer kind of you get the first chance to outline all of the terms. So if you are in a competitive situation with multiple buyers, or maybe you just want to come out strong without raising the price of the home, there are ways to do that. So first and foremost, you need a pre-approval letter. That makes your offer so much stronger, and the sellers see that you're serious, especially if you have a local lender who has a good reputation and who can go to bat for you.
Do people submit offers without pre-approval letters?
I hope not. But I mean, we get them sometimes, and they'll say it's coming, but we want it in hand to really be able to kind of tell the story.
Yeah, well, and someone was just telling me that they have clients submitting offers with an online pre-approval lender, and they're just getting brushed aside. So people are doing it, but don't recommend it. Yeah, so have your pre-approval letter in hand and have your lender ready to call the listing agent and go to bat for you and tell the seller that your financing is strong. Next, figure out what the seller wants. Do they want to close quick because they're ready to move and they have
Like their contingent?
Yeah, yeah, exactly. So, or on the other hand, are they not ready to move? Do they want to rent back? Do they want a longer escrow? Like these can all be things that you can find out, hopefully, from the listing agent and submit your offer accordingly.
Fun fact, say you're closing in June, you're not going to have your first mortgage payment July 1st. You're going to have your first mortgage payment August 1st. So you could offer the seller a free rent back to make your offer stand out, and that saves them a lot of money without necessarily costing you any.
Mhm. Yep, exactly. When you talk about your earnest money deposit, you can, if you want to get really competitive, you can make part of that hard, which means non-refundable. That again that shows the seller that you're really serious
This is
because
giving me PTSD of 2020 when you
Yeah.
do this.
yeah, it's not very common right now. This again is if you're like really trying to get the home. Because if you make part of your earnest money deposit hard, it is not coming back to you, even if something catastrophic happens on the inspections and you back out.
Would you ever recommend someone doing that?
It would really just depend how many offers do they have. If there's 0 offers, it's been on the market for a while. I would not recommend it right now, but it really is just each property in specific.
What if inspection report's already in, they're clean, you look at the comps, the appraisal looks okay, they told you that they will not live to breathe another day if they don't get this house.
Okay, in that situation, I would potentially consider that. Yes, definitely.
Very specific, out of the box situation. Um, okay, next up is appraisal gap strategy. I'll get into that a little bit more later. But Ainsley and I actually were just putting together a pre-approval yesterday, and the client was seriously considering offering an appraisal gap strategy because they wanted the house and they wanted certain things in their offer. So we went over that and slept last night over the phone.
Yeah, he woke up and realized he should be more serious.
Mm-hmm. Yeah.
Yeah. They ended up not submitting it like that, but it's always good to know. And that's why we're going over this. It's good to know what tools are in your toolbox, even if you decide that you're not going to take such a measure.
Yep.
Okay, next you could cover some closing costs traditionally paid by the seller. That is similar to going up in price because it directly impacts you paying more at closing. So while you're not going up in price, you are going to pay more if you cover closing costs that the seller would traditionally pay. Then you can lean into motivation.
So it's more than if you go up in price it's way better for the seller.
Okay, explain more.
Am I saying that right? Because like you go up in price, does that affect the seller's bottom line as much as you directly covering costs for them? Yeah, because the sellers don't have loan amounts. Never mind. Disregard it.
I mean, I think you're right because there's certain costs that are based on the purchase price of the home, transfer
That are
tax,
percentages.
commission. Yeah. So, I mean,
As you go up in
marginally.
price, they're paying the realtor commission more based on a percentage. They're paying some title fees based on a percentage.
Transfer tax.
But you offer to pay closing costs, you're directly reducing their bottom line.
Yeah.
It's not going to be huge.
It's not going to be huge. But I do feel like this one's a little harder to get the seller to like see the value in it. What do you think? Do you think?
I think you definitely have to spell it out and maybe even provide the listing agent a net sheet. Like, here's what our offer gives your seller bottom line.
Do you ever want to scream because like you're like, can I just present this to your client? You don't have
Yes.
faith in the listing agent to explain it properly?
Sometimes, yes. But it's just so important to have really good communication. I mean, spell all that out in a phone call. Like, always pick up the phone and call. This whole text thing, I mean, who knows if it's even their cell phone, if it's their office phone, like communication is huge.
Do you know how often I misread a text because a kid was screaming or like I glanced at it while driving and then in my head I'm creating a whole nother response because I missed the not and just read did.
Yeah.
You know what I mean?
Or you put it on CarPlay and you're like, I'm gonna get back to that one, and then whoops, the day goes by.
Yep. Yeah. And now your message is marked red.
Yes.
It's gone from your brain.
It's a lot of anxiety.
Yeah.
To that.
Yeah. I like that Apple lets you mark it in red now. But anyway, okay, sorry. Okay, next up, yeah, so you can lean into the personal connection. I heard that you're no longer allowed to submit a letter with the offer. Is that true?
It's definitely not encouraged. There's just a lot of stipulations that could go with that. So I think, once again, talk to the listing agent, kind of tell that story. You're not providing the letter, but hopefully maybe they can convey that message in some
other
extent.
way.
Mhm.
Okay, that makes sense.
I had clients get their offer rejected because they were California buyers. Sellers took a higher offer. I mean, sellers took a lesser offer, netted less money because they didn't want to sell to out-of-state buyers, which is the seller's prerogative. But it just goes to show that conveying the story can help. Sometimes conveying the story would not be helpful.
Yeah.
But no one would have known that someone was really going to take less money over that. So it's not the agent's fault at all, but it's just interesting to know like the seller's a human being on the other side of this, and getting personal can impact things.
Yeah. Yeah, I mean, I've seen sellers who purposefully want to take a VA offer to help veterans, even though it might not be
them.
the best. Yeah. And I mean, there's a lot of stigma around sellers don't want to take an FHA or a VA loan because the appraisal standards are higher, which happens sometimes. But I mean, sometimes seller wants to give it to somebody
They
who
want to pay it
served our
forward.
country. So anyway, if you can convey that, it could help. Other options are you could shorten your contingencies or even waive some. Again, this shows seriousness. So contingencies are your way to get out of the deal and get your deposit back. So by shortening that time frame on any of them, loan contingency, appraisal, inspections, it shows the seller that you're serious, you're going to do your due diligence, and then they can have confidence that you're going to move forward with the deal. And last, you could submit a cash offer. So we have a program called Home Simple where we can pre-approve people to write cash offers. So you still use financing. We get you pre-approved for the program. And then when you find the home, we submit an offer on your behalf, all in cash. We buy it in our name and then resell it to you. But to the seller, it's a cash offer that can close in 2 weeks.
When we do the Home Simple and we buy it for them, we need to do an automated valuation of the property. How long does that take us?
Well, a couple hours.
Okay. And then when we keep it and we own it until we sell it to them, we charge them rent.
No, there is a daily interest calculation, and that gets paid upon resale of the home to the client from us. So yeah.
Those are real questions, not planted. Was just wanting to confirm.
Okay, so speaking of ways to make your offer
I said you
stronger,
were sharing big news because I thought it could like taint people and tease people.
sorry, I just laughed so loud.
She's so mad when we make loud noises on the mic, but what about when we say really bad words? Tease people into thinking you're quitting or something to get them on this. That's not the case.
Nope. So great news. I got into contract on a fourplex here in town. I wasn't even looking. I mean, I'm always like keeping my eye out, but anyway, this property came up. I was not the highest offer. I was competing against multiple other offers, but had a good lender. And we leaned into the fact that I'm a woman, the seller is a woman who wants to support other women. So just with all of that, I shortened my inspection contingencies, even waived a few. So I was, showing that I was serious.
I'm a
And
single woman investing in real estate. If there's any single men on the phone, the 10.
but anyway, yeah, so I got it. So that is, again, a way that you can be really competitive without going up in price necessarily or being the highest price.
What's it like personally doing this versus when you help clients do it?
Oh God, the sinking feeling in your stomach that you get is, I'm like, oh, that's what everyone's going through all the time. Okay, it's been a couple of years since I bought my house. That's a bitter for sure. Because it's nerve-wracking, right? It's a huge financial decision. And then you're trying to vet the property, make sure it's in good shape, not gonna whatever. All the what ifs
Ticking time bomb.
are coming up. So I mean, it's a good thing I have practice walking my clients through these panic moments because I know that there's such a benefit to investing in real estate in so many different ways that it's worth the getting through the heartburn that you experience when you get to certain stages when you see the inspection report. The inspection report is always going to be so long, but that's their job is to tell you every little thing that they find. And maybe it's not a big deal. So yeah, it's been good to remind myself.
I always think about this with investors that we work with who are like on their 20th, 30th, and they're so cool, calm, and collected. And I'm like, when will I get there? Because fun fact, Sandy goes, can you come see it with me? And I was like, I'm not really interested. And she goes, what do you mean? I go, I don't even look at the houses I buy. Like we closed on our lake house. I never saw it. I just run the numbers. If I like the numbers, I like the house. And I'm not good at as everyone all the trolls on Instagram tell me every day, I'm not good at decorating. So what does it matter what the house looks like? Same with our rentals. I don't Josh drives by them every week to make sure they're still there. But I literally haven't been inside most of them. Oh, I've only been inside one duplex and seen what it's like. And that was like
Which is good.
5 years ago.
That's a very analytical way to look at a very, numbers oriented investment. I figured since it's here, a block away from the office, I'll just go look at it, crawl into the crawl space. Spiders were there, let me tell you.
I think it's important to see it at least once if you don't have somebody looking on your behalf. I have the luxury of that because so you guys, we do this every month on the first Wednesday of the month. You don't have to wait for this webinar to keep in touch with us. We'd love if you connect with us on Instagram. Ainsley would love that too. Give us a follow, but then also talk to us. We like to answer your messages and DMs, and we put a lot of work into sharing what's happening with you in real time. Sandy's also going to be doing that with her investment property purchase so that you can learn all about it.
Yeah, I need to talk more about it.
Okay. Next thing we promised to cover today was appraisal gap strategies.
Yeah, so back to making your offer really competitive. If the appraisal comes in low, if you're worried about the appraisal coming in low, or even if you feel confident the appraisal will come in fine, it really is kind of a best guesstimate. Any appraiser can look at comps differently than any other appraiser or realtor. But if you offer the seller an appraisal gap strategy, that really strengthens your offer because if the appraised value does come in low, you're giving them comfort that you're going to buy the house anyway. Then there's limits that you can put on it. You can say, okay, well, I'll waive the appraisal completely. That means if it came in 100,000 low, you're still agreeing to pay that. So that's pretty extreme. Or, I mean, you could look at if the home's listed for 500,000, okay, well, I'll agree to buy it if the appraisal comes in at 490 or higher. So you're offering 10K buffer. So different ways to do it, different, depending on your comfort zone. And if it does come in low, you owe more out of pocket unless we can put together a strategy similar to this. So if the appraisal comes in low, we can only lend on the appraised value. So now your down payment is based on that lower appraised value. If you didn't waive the appraisal, typically that's when you would renegotiate with the seller. Okay, well, I need you to come down in price to match the appraised value, or we're going to come in the middle 50-50 or some other split. But this strategy is if you were to, so, okay, if you bought a house for 450,000 and offer the seller a 15,000 appraisal gap coverage. Okay, well, then the appraisal comes in at 435. So in this strategy, if you wanted to do this with your offer, essentially you would cover the 15,000. We actually lower your down payment in this scenario. So your cash out of pocket is still just under 100,000. Your payment goes up $39. So this is a way that if you wanted to be really competitive, you wanted to get the home still, we could make it work so that you're still coming out of pocket with the same amount. Your payment is still very similar. And now your offer looks so much stronger to the seller because you can pay them the price that they really wanted, even if the appraisal comes in low. So just a strategy. Again, you don't have to do it. It's not that common in this market, I don't think.
What are you thinking?
Like I said, depending on the house, sure. Yeah, I mean, it can definitely happen. There's very competitive houses. And I say houses because the one next door might not be competitive, but the one here is. So I've seen it a couple of times in the last few months for sure.
Have you been lately seeing appraisals come in low?
Well, I have been seeing appraisers really ask questions like, are these clients getting a credit? I'm just trying to see how this makes sense. So that has been really helpful. Nothing too crazy that really I have seen, but it's been super nice to have the appraisers call and just kind of see what's going on.
I've noticed a huge shift with appraisers being more like helpful
Mhm.
because 2023 was so slow for them after, years of it being insanely busy. And they, if they didn't want to take this order that was a little more complex, they didn't. If they wanted to extort us for an extra $1,000, they did. But now this shift that happens in a market is really tough on people in our industry. But a good thing that always comes of it is that the good ones stay and they also learn to be more collaborative. And like it's not about influencing the value. It's just the appraiser being more willing to receive all the information.
Sure.
Because they're not so rushed. They don't have 15 other orders stacked up and they want to do a good job on this because they don't want to get put on our exclusion list.
Mm-hmm.
So I think sometimes these market getting the way it is right now with all its challenges can have positive impacts.
Yeah, it is interesting. We had, I mean, this was maybe a year ago, but appraiser came into the office to like schmooze us.
We were like, times have changed.
Because they used to just be like, yeah, you can just
Don't talk to her.
yeah. It's like, oh, okay.
Which we actually aren't allowed to choose our appraisers. It's randomly assigned through a third party, but it's just a different ball game when appraisers are like hungry for the work.
Oh, my turn.
This webinar is really fun for me this time.
Okay, so this month's success story, I want to talk about piggyback loans. So I don't think enough people know about piggyback loans, but they're really cool. Essentially, piggyback just means a second loan that you get at the same time of your standard regular loan. So we see this a lot on higher priced homes that would be in a jumbo loan territory. Jumbo loan just means it's above the government's limit for conforming or under the government purview guidelines. So above that, we get into jumbo territory. The underwriting is different. It's a little more stringent. There's overlays sometimes that we have to jump through some hoops. But with a piggyback loan, we can do two simultaneous loans. So now your main mortgage is under that conforming guideline. So you can get typically better interest rate pricing,
Easier underwriting.
more favorable terms, and avoid mortgage insurance. So and come in with a less down payment. That's, I would say, one of the biggest advantages is you can come in with less down. So for this specific home, it's in the $1 million price point. They would have had to come in with like 300,000. We're doing the piggyback loan so that we can get their first mortgage in the conforming guidelines, get better interest rate pricing, and they're coming in with less than 100,000. So
And they can pay off the second mortgage to improve their monthly cash flow at a quick pace. This is another like if you're an entrepreneur, commission-based industry, somewhere where you get large chunks of money, but you don't have it right now, you might be really interested in a piggyback loan that you could just eliminate sometime in the next couple years.
yeah, or for these clients, when they sell their house that they're leaving, they'll pay that off. So even though the HELOC or the piggyback loan is going to have a higher interest rate, for them it's going to be very short term. So it just made sense. And it's just a really cool strategy that I think more people need to know about. And we got that bad boy clear to close from application in 14 days. So
So even though it was complicated, it wasn't like a pain in the ass.
yeah, well, I don't know if I'd say that. Different choice of words, but huge. Because again, in writing a competitive offer, they offered the seller a very short close. So we said that coming through.
Okay. For our pointer this time of something that information we want to give you that could be helpful for you. A lot of people don't understand pricing tiers with their credit score, and this impacts your interest rate, your mortgage insurance cost, and your underwriting because AUS, our automated underwriting system, includes your credit score and to account for what conditions it requires. So the minimum for a lot of loan programs, you're going to want to be in the 600 range. We do have some that go down to 580, but starting in the 600 range, you'll see eligibility for FHA, VA start. We get to mids to high 600s, you're going to do better with the conventional. You'll start qualifying for conventional financing. You're in the jumbo loan territory, you're really going to need to be above 700 to get decent terms. People will call me and they'll say, I don't want my credit pulled because I don't want to lose points on the score. And I'll be like, well, what's your credit score? Well, I guard it with my life. So it's 800. I'm like, that's great for you. That makes me so happy to hear because it can go one of two ways when people are asking me that question. But you're already in the highest, best tier for terms. So you don't need to panic. You're above 760, and that's as good as it gets for these things. A lot of people think it's 780. I, in my head, often confuse that. It's actually 760. Once you've hit 760, you're good. Yep. Sandy's one of those people guarding her score to get it like as high above 800 as she can. But it really isn't going to help her when she goes to get a mortgage.
Well, and the thing is, a hard inquiry impacts your score 2 to 5 points on average, and it rebounds quickly. So it's fine. You're going to be fine. And it's good to have the check, like make sure there's no fraud, make sure everything looks right.
Those are all your accounts.
Yeah.
All those things. Now, when you move between a pricing tier, it can have a major impact on the cost of your mortgage insurance and your interest rate. So something that All Western has is we have a credit analyst on staff. And all the time Sandy and I will see, oh, this guy's at 719. Let's just shoot it over to Joe and see if there's something simple he could do to get to a 720 in that bracket. And then all of a sudden he's going to have a much better loan experience and rate. And so that's something that I think you should keep in mind as a strategy to help you improve your terms on your financing. is sometimes you could just move a few points and it's a whole different ball game when you go into a new tier. So my pointer would be take Sandy's advice and do have your credit checked every once in a while, a full inquiry, not just an online monitoring service, but a proper report. And then you'll know where you stand and you can get advice on how to optimize it. We're happy to hand out that advice anytime because, like I said, we have someone on staff who's literally been at this like a million years.
Yeah.
He doesn't look that old, but
No.
his advice is so good that I feel like he's 100 years old.
Yeah. I mean, he's literally had people jump 100 points in like a week. It's crazy.
He saved a jumbo deal for me because the people were under 700. They got denied by another lender, and he had the simplest fix.
Yeah.
Got them their house.
Yeah.
Okay, guys. I think that's bringing us to the end, but in July is the forward event. Are you going?
Fun. Potentially getting married. It's a lot this year.
I think you should go because I have 10 tickets that Neil let me cover the cost of half. So you can get a ticket at half price if you use this QR code. If you go to scan the QR code and it does not let you buy it at half off, that means the 10 are gone. So please don't text me because there's nothing else I can do. But if you want to go, you guys, this event is a marketing event. It's not going to be like your usual Barry Habib and Tom Ferry, the same information every other realtor and loan officer is getting somewhere else. This you've been.
It's amazing.
Yeah.
It's not your average real estate conference. It's like a party. And the speakers are so much better, right?
You can't even explain how good it is. You just have to go and experience it,
The
truthfully.
vibe is like a whole other level.
It's next level.
Yeah.
So I would love to see you guys there. Any entrepreneur, if you have a business that needs marketing, which is every business, you should be at this event. Don't miss it. And if you want any advice from us personally, if you have questions, you want to talk to us one-on-one, just use this QR code and reach out to us. If you want to get in touch with Ainsley, her Instagram was up there. You can also send us a message and we will forward her contact information. Thanks, everyone.
Thanks, Ainsley.
Thanks. This was fun.